Good morning, everybody. So the question for the day is, who says special situation investing is dead? Where is the deep value in the market? Well, I think I've stumbled across something that I found on FinTwit, and other great investors that I follow there have been talking about this company, HRBR Diversified, quite a bit recently. Looking at this company with a Ben Graham style analysis, it looks super cheap, and I'm really interested in digging in further. So I'll go over the basic investment thesis for this company, the valuation, and I'll talk about some lessons we can learn from situations like this. HRBR Diversified is the parent company of a regional airline called Air Wisconsin. And Air Wisconsin has, I think, about 36 regional routes. They fly out of two regional hubs, which are Chicago O'Hare and the Washington Dulles Airport. HRBR Diversified has been public for a long time, since back in 2005, but for a large period of their public existence, they've been both on the over-the-counter markets and have not published SEC filings. But recently, due to a shareholder push, they were forced to again begin reporting SEC filings. For the longest time, Air Wisconsin has been in a partnership with United Airlines under a capacity purchase agreement, which basically means that Air Wisconsin flies under the United Airlines banner for all of these regional routes. Unfortunately, however, United Airlines recently did not renew the option to continue this CPA agreement with Air Wisconsin. So there are a lot of questions surrounding that situation. It is possible that United Airlines is renegotiating a contract with HRBR Diversified, possibly with more favorable terms for United Airlines itself. In the past couple of years, it's been a pretty one-sided situation. HRBR Diversified basically agreed to fly a certain number of miles and hours and things like that. But because of COVID, there's been low demand for this regional travel. So basically, United Airlines paid HRBR Diversified upfront for a lot of this air travel that has not really been serviced by the company. Regional airlines have better economics than national because, well, they have less expenses, basically. A lot of that is put onto whoever's in this CPA agreement with them, which in this case traditionally has been United Airlines. So the way it works out is that the regional airline takes care of the aircrafts, the maintenance of the aircrafts, and the crews. The larger airline that it's working with pays for things like fuel, insurance. It does all the route planning. It sells the tickets. As you can see here, there's basically a huge bucket of unearned revenue or deferred revenues, which is basically money that they've received from United Airlines, but have not rendered the services for those fees. From my understanding, pretty much the only way that United Airlines can recover these deferred revenues is to continue working with HRBR Diversified. So if they actually care about that money, then I think that a renewal of contract is likely. So understandably, it is problematic that United Airlines backing out of this agreement basically puts this company into a tailspin. However, I do want to point out just some of the financial metrics here. So first and foremost, the market cap of this company is currently sitting at $115 million with a total enterprise value of nearly $50 million. Basically, what that indicates to me is if we go over to the balance sheet, we take a look at the cash and short-term investments of $170 million, and then subtracting the debt, we see we have a net cash position of over $80 million. So without considering any cash from operations right now, we can take a quick liquidation valuation for this. We see that shares outstanding, where are you? Shares outstanding, about 54 million. The company is buying back shares. And let me hop over to this is the latest 10Q filing. And throughout the most recent months of 2021 for this report, July, August, and September, they were buying back shares at an average price of $228, $237. And then in September, they didn't buy back any. The stock is sitting at $2.13 at the time of this recording. So unless management is completely nuts for buying back shares at this valuation, then to me, that screams undervaluation. Anyway, the items I'll be looking at are 54 million in shares, the total cash and short-term investments of 170 million, subtracting any debt. We'll use this net debt number of, or net cash number of 80.67 million. And then in the event of a liquidation, we might check out the receivables, heavily discount any property, plant, and equipment. And we'll also probably include some more of these liability options, such as accounts payable. And again, I've already touched on this unearned revenue current. United Airlines paid up front, and unless they keep working with HRBR Diversified, it doesn't seem like they'll be able to recoup any of this. So not saying it's not a real liability, but they're incentivized to continue working with HRBR. Let's do a very conservative valuation. So this is a sheet that I threw together, and we have the net cash, the accounts payable, the accounts receivable, and then the PP&E line number at a quarter of what is stated on the balance sheet, just for conservative stake. And then divide all that by the shares outstanding of 54.14 million. And we're getting about $2 per share at a very conservative liquidation value. But one thing to note is if we come over to the cash flow statement, first of all, we'll be seeing that the net income does seem to be a little inconsistent, but they're having a banger year this year. And the actual free cash flow per share is almost the current share price. Some of these metrics are kind of ridiculous. They're selling at 0.6 price to book, just 1.6 price to cash flow. And then the PE is, of course, pretty low at 1.3 and price to sales at 0.6. The terms of the agreement end on 2023, and because they declined to take that option of extending it further, this seems to be where that liquidation might occur or an acquisition might occur, depending on whether or not they do not renegotiate this contract. So the end is in sight in February of 2023. So just based on this quick analysis, we're seeing that there's very little downside for this in a potential worst case liquidation scenario. But again, the company has a few upside opportunities. And additionally, these are just best guesses on the liquidation, of course. They could earn a lot more than a quarter of the stated value, or a lot worse than the quarter of the stated value for any PP&E they have. They own a bunch of airplanes and such. So depending on what the scrap value for that is, that could change that equation a lot. So it's hovering right around a rough estimate of potentially a liquidation value for the shares. But part of the upside has to do with the potential to renegotiate a contract or continue to work with UAL in some fashion. Another option is they might get acquired, or their assets might get acquired by United Airlines, first of all, or some other carrier. HRBR Diversified has been hiring pilots for CRJ 700s and 900s, which are larger than the aircrafts that they use for their regional routes. So it looks like they're gearing up for something. Another option is for HRBR Diversified to branch out into cargo carriers. So they can repurpose their current aircrafts for this cargo scenario, and are in the works in exploring that option. But I'm not including any of that in the valuation case because, you can't predict the future, but I would consider a new contract or being purchased by another airline or United Airlines or cargo, all of which would mean that in some form or fashion, their assets or the business would become a going concern. Those are just three upside options that we have here that are not being priced into this company at all. If you want to take a look at another valuation or deeper dive into this situation, I'm going to link below a resource, a write-up that I found really interesting on a Substack newsletter. This investor seems to have been following this situation really closely and provides a lot of great due diligence for the situation. So if you want to become an expert, this is probably required reading. I wanted to cover one more thing about what kind of lessons we can take away from this. So even if we don't want to invest in a special situation, specifically this one, maybe that $2 floor isn't so attractive when it's currently trading about 10 cents above that. Keep in mind that these situations still pop up. That's really the point I want to get across. I found this really interesting tweet here. This was back in 2020, late 2020. Air Wisconsin's trading at a $12 million market cap with $4 million net income in the previous quarter, 54 million shares outstanding. They had $288 million in assets and $78 million in cash. So talk about a margin of safety there, just based on the cash balance alone. The difference between 12 million and 78 million. Insane. Not to mention the annual revenues of the time at $265 million. So I'll leave a link to a couple write-ups. Some of them are before United Airlines actually did not renew the contract, but they still provide a lot of great background information on this company. So even if the investment case is a little less compelling right now, if we had been paying attention back in 2020 when these numbers came out for this company, it would be pretty evident that it would be a no-brainer type of deep value investment for me personally. It's just a reminder that as a small investor, I can look at places where other investors either aren't willing or are unable to put their money. If you told me that I could buy an entire regional airline for $12 million that has almost $80 million on the books in cash, I'm pretty much already there without much more convincing than that. I mean, depending on the debt levels, which currently we have net cash position, so no problem there. So around November of 2020, we're seeing the share price sitting at about 20 cents per share, when, as we know, based on the current information, potentially worth $2 per share. So if we had just been paying attention, simply, I don't know, this probably would have come up on a quantitative screen. Screens could potentially work for something like this. We missed on a shot from 20 to what is it, 280 per share. An incredible ride that, had we been turning over rocks, we could have potentially joined in on. So yeah, overall, this is a flyer on a company that, while logically has a liquidation value floor of hovering a little bit less than the current market cap of the company, there is a lot of upside optionality for this company. These write-ups are great, and especially the one on Value Investors Club. There are a bunch of good comments on the messages side, and several of those are from Jeremy Raper, who is, again, an excellent investor, especially in these special situations. So go read through those. Come to your own conclusion if you're interested, please. But needless to say, I am pretty interested here. I'll be watching this one closely and will be seriously considering pulling the trigger on a portion of my portfolio. I'm not sure what. If the share prices go below $2, which provides some margin of safety for the base case. I'm seeing some valuation work that is making a base case of about $2.75 per share. So depending on your conclusions, it might be a wonderful upside here with very little downside. So yeah, I'll continue my research. I just wanted to share this with you. Again, if you're interested in special situations, small and micro caps, there are still opportunities out there, as is evident with this company. In the current state, it does rely on a little bit of projecting into the future, on some uncertainties. And, I'd really like to talk to management, but I haven't done anything like that. So depending on their confidence and competence with the business, well, we'll see where it goes. Anyway, thanks for watching this. If you enjoyed this video, you may enjoy this one over here that the YouTube algorithm has picked for you. Please like the video and subscribe for more if you enjoyed this. I thank you so much for your time, and I appreciate you watching this all the way to the end. I will see you in the next video.